Hello, hello. Happy Sunday, everyone. Hope you guys are doing well. Let's get an audio check here before we get into it. Alrighty, should be good to go. All right, guys, welcome in, welcome in. Kevin, happy Sunday. Happy Sunday to you, my man. Reaper, good to see you. Good to see you. Glad to be here, guys. Michael, hello, hello. Jeff, happy Sunday, brother. Glad to have you. Eslam, happy Sunday to you as well. All right. RJ locked and loaded, my man. Looking forward to it. How we all doing this Sunday? How was the previous week's trading for you guys? Silver Bullet, hello, hello. Hello, Unicorn. Alrighty, guys. So going into this one here, I'm going to do the usual weekly outlook, what I'm looking for, what I'm anticipating, how I've pivoted from the previous week. In addition to that, I will also, at the end, do a market review. This is something that I did with the community, with the mentorship clients after the live trading, after we beat the stocks off the S&P. I went into a short review covering what I was looking for. Obviously, it's the same stuff every day. 15-minute highs and lows. If I'm bearish, I wait for the market to take stops. It doesn't get easier than that. So, of course, I covered all those basic details, but I want to go into deeper analysis as to what allowed me to pivot, because what many guys will actually remember is I had a bullish bias, especially going into Friday, based off what I saw in the daily chart. But I want to go into how understanding market structure and institutional order flow allows you to pivot when you know how to read a price chart. So my intention is to review, and for those of you guys that were there with us trading, this will just be additional review for you guys, but I'm going to go into more details in the market structure, in the order flow, that allowed me to then look for lower prices on Friday's trading. So I'll have that ready to go once I get done with the usual weekly outlook, when I'm looking at dollar, bonds, indices, and then I'll go into a short review of Friday's trading. CM, happy Sunday. Yeah, glad to be here, guys. Tommy, my man, good to see you, brother. Great trading last week. Absolutely crushing it. Wednesday through Friday was great. Love to hear it. Love to hear it. Friday New York session, I saw dust. Yeah, it was a fast drop. It was a fast drop. And then what I'll even go into is what allowed me to get into it without actually chasing the price run, right? Because many times that's a common issue with traders, is we see the market either drop or rally really quickly, and then we just don't know what to do and we're frozen. And either we miss the move or we chase price, which is the worst thing to do. So what I'll go into today is some of the procedures I use when the market drops a lot, but I still think it's going to keep dropping, and how I'm able to get in sync with a move that's already unfolding without chasing the market, right? Big difference. So like I said, we'll cover all those details, cover all that great stuff when we get into the review portion after I get into the outlook. And then from there, any questions you guys may have, I will look to take those here as well. Samad, my man, trust you're doing great, brother. Yes, sir. All right, so let's get into the business here. Weekly chart, or sorry, monthly chart. Getting back in the swing of things here. So monthly chart for US dollar. If you guys recall, last week, the draw was this monthly fair value gap. Again, I was not saying we need to get down there in one candle or that week. As long as we just understand that the market is drawing down into that level, that sets the bias, that sets the framework. Joe, hello, hello. Glad to have you, brother. That sets the framework for what we're looking for in the lower time frames, right? So when I'm looking at a daily chart, hourly chart, 15-minute chart, the higher time frame draw is always in mind. So we have this monthly fair value gap here that I'm suspecting we're going to keep drawing down into, and I suspect that will continue going here into the new week. Dropping down into the weekly chart here, a couple things I want to take your attention to. Starting here in the price run, we see this candle traded higher, snap lower, than that creates a wick. We read wicks like gaps. So when I saw this, not the previous week's candle, but 2 weeks ago candle, open, trade higher, fail to get to midpoint, that's telling me two things. One, that the market's weak, but also that it's going to drop then. So being able to read order flows, not just knowing whether a market's bullish or bearish, it's also giving you the timing aspect as to when these explosive price runs are going to happen. So the fact that we opened, traded higher, couldn't reach the midpoint, weakness closing below this gap here. This week we opened, traded higher into the inversion fair value gap. Market had to stay in the lower portion, just like it did. And then we got a nice acceleration to the downside, and we'll see what that looks like in the lower time frame, and you can see the accumulation, manipulation, and distribution taking place on the weekly candlestick. Draw is still this monthly gap down here, and then you can see on the weekly chart, that's going to be a nice sell side liquidity pool in here. Again, still looking for weakness based off the closure below this gap here. And then the fact that we opened, traded higher, again, failed to reach midpoint here. Same thing like here, right? If wicks are gaps, this is a gap as well. It's the same thing. Open, traded higher, couldn't reach midpoint, indicating it's weak. Same thing here, open, trading higher, failing to reach midpoint, things you want to see if you're short. Also have an immediate rebalance here. You also want to note that. That's important. So likely you're going to look for continued acceleration to the downside, and then we'll also confirm that with the bond market here shortly. One sec, I want to scrub this back over here. All right. So looking at the daily chart, and you can keep the weekly fair value gap that I had, that inversion, you can extend that through just to keep it clean. I'm just going to focus on the PD arrays that are on the sell side of the curve right now. For more precision, right, if you understand market maker models, you can extend the PD arrays on the buy side of the curve to see where the market can retrace to and see key PD arrays the market should reverse from. But just to keep it simple here for you guys watching this fair value gap, again, we have this large wick here, market failing to reach midpoint, breaking down. Fair value gap we were watching last week, or sorry, 2 weeks ago. Market traded up into that, the bodies stopped there, and then we displaced to the downside. So we see the displacement is on what side of the market? The downside. Communicating order flow is bearish. So throughout the live sessions here, during the week in the live coaching sessions I'm doing, calling sell side each day for US dollar. First this sell side, and then this sell side liquidity pool here. And then one of the things I throw in, since I'm already looking at the dollar, also call euro and pound, and doing that effortlessly last week. Because again, like I always share with you guys, once you know where the dollar is going, euro and pound, it's really easy to know where it's likely to go. So even though I don't trade those markets, still calling them, giving targets before they deliver. And again, the only reason I'm able to do that is because of what I'm seeing in the US dollar, and then what we're going to cover in the bond market here as well. So going into the daily time frame here, zooming in, you guys recall this daily fair value gap here was important in our analysis last week, and it's not random that we traded higher, made a swing high, pricing in the high of the week, and then accelerating down into this low. I really like how they kept it in the lower half, so they left this fair value gap here open, indicating that we're likely going to see continued downside expansion. Small gap in here, would not want to see us get above this high, because this high already traded up into it here. I'd want to see these two candles behave as a bearish order block here, because this retracement here failed to reach midpoint. These two up close candles should act as a bearish order block, so I do not want to see these up close candles violated. So we can trade up into them, but I want to see continued weakness and then make a run for this sell side here, which is also, again, that monthly fair value gap. Working down into the hourly chart, if we're bearish and we're looking for lower prices, we initially want to see a high priced in of the week, which makes sense, right? Before we go lower, a high has to be priced in. So we see accumulation, manipulation, pricing in the high of the week inside that daily fair value gap. So when you know the market's bearish, which we covered last week, so if it's bearish, it's going to draw into what? Sell side liquidity. The market delivers in very generic ways. So if we're expecting a reversal from this daily fair value gap, it's only going to do one of two things: run stops or give a failure swing. In this case, the market trades higher, runs buy stops, so that's a stop run in a premium, and then we break down, there's the market structure shift, and then that begins everything rotating to the downside. So pretty easy read for dollar last week. I'm sure currency traders that are following along with what we were doing, pretty easy money for you guys last week, as it should be. And then once we price in that low going into Thursday, market pulls back into the range. So looking for continued downside here going into this week, just to show you guys here what I'm looking for. Want to see a sell-off from this order block and trade down into that monthly gap. Moving right along into the bond market. Let's go up to the, we'll start with the daily or weekly chart. One sec, let me zoom in so you guys can see the candles. All right. So looking at the weekly candlestick here, we had an open, low, high, close. So bullish expansion week for bonds, which further supports lower prices for dollar, right? If we're looking for lower dollar, we want to see bonds trading higher, because that's going to confirm what we're looking for with intermarket analysis. So strength in bonds, making lower prices for dollar even more high probability. Working down into the daily chart, we see last week we traded lower. Wednesday pricing in the low of the week inside of a bullish order block here. And then nice expansion away from that, looking for this daily swing high. So as long as the bond market continues gravitating higher into the liquidity here, and then you can look at these inefficiencies here above that swing high. As long as that remains true, we will continue to see lower prices for US dollar. One extra thing I'll throw in here, looking at the 4-hour chart, extremely bullish order flow, right? We have this balanced price range here. Market drops down into that balanced price range here. Aggressive displacement, 2 fair value gaps, leaving this fair value gap open, and then displacing above this high. So looking for continued upside on bonds, just based off reading the market structure and the order flow. So getting into indices. Now this is where it's going to get exciting. Let's take a look at indices. Let's go ahead and zoom in here. All right, so weakness in indices. I'm sure that was the story of the week last week with the major sell-off that we got on Friday. And one of the things that's going to allow me to look for continued weakness. So I will be looking for bearishness in indices right now. We had an SMT divergence at the highs, with NASDAQ making a higher high with the bodies and S&P making a lower low with the bodies. After seeing that SMT at all-time highs, then breaking down, and you'll see what I'm looking at on the daily chart, these are some of the factors that are going to allow me to look for lower prices. And then if you look at the Dow, last week the Dow was communicating that it was not willing to rally with indices, right? And you'll see with the other 2 indices rather. And you'll see on the daily time frame, while NASDAQ's trading higher, clearing out these highs here, same thing for S&P, trading higher, clearing out these highs, Dow was not willing to do that. So we have S&P with the Dow. Just saw your question, Kaylee, SMT, where the SMTs with the bodies, right? So there's also SMT with just looking at higher highs, higher lows with the wicks, but also the bodies as well is a form of an SMT divergence. Looking at the Dow here, as I was saying, we have an SMT here. So as the other 2 indices were rallying into a higher high, Dow was not participating at all, confirming now, but initially indicating that this was a suspect rally in the indices. And then the fact that the Dow was selling off as these 2 indices were rallying, confirming that the markets priced in the SMT, likely looking for an intermediate term high. Meaning, if it's an intermediate term high, we're likely going to see a nice price swing to the downside. So that's how I'm using intermarket analysis to relate those factors together. Going back to the NASDAQ now, just to look at the NASDAQ, and before I get asked you to take a look at the Dow S&P, it's going to be the same thing. So looking at the NASDAQ here, weekly chart, we have this wick here, extend that midpoint through. Bodies could not get above the midpoint of that wick, indicating bearishness. So I really like these equal lows here on the weekly chart as a draw on liquidity. Again, as long as order flow remains bearish. Julio, my man, good to see you, brother. Now looking at the daily chart here, zooming in further, we see the market traded higher above these highs here, right? So we have these equal highs, the market traded up into them. And then what I was watching was this last up close candle before this rotation to the downside, or a bearish order block. What I was noting was the market traded higher, but then look at the bodies stopping here, unable to get above the midpoint. So on Friday's candle, I was initially bullish because taking off Friday's candle, I want to give you guys kind of what I was looking at, and then this will transition into the review portion. I liked how the market dropped down into this gap here, hit midpoint, left the lower half open, and then we snapped higher. So going into Friday, I was looking for a bullish daily candle. Like I said, I'm going to go into how I was able to pivot, understanding market structure and order flow in the lower time frame, and what prevented me from going long and actually allowed me to reverse and crush it on Friday's trading. But looking at the daily candle now for the outlook portion, you'll see the market aggressively traded through that fair value gap here. So now I suspect this is going to act as an inversion fair value gap, which just means it reverses as well, right? If we're looking for it to act as support, now I want to see it act as resistance. And ideally, we'll see it stay in the lower half here. And if we can't even come up and touch it, then that's even indicating further weakness. It's even more bearish if we can't even get up into it. So what I'm looking for is downside targets based off this swing high here, inside the bearish order block, and then this displacement away. Likely we've seen an intermediate term high here priced in. So what I'll be looking for is sell side here, here, and then eventually all the way down here. But I have to see several factors. I want to see how the price run develops. Do we leave fair value gaps open? Do we continue displacing through lows, right? So before we get down here, right, there's a lot of ground we have to make from here down to there. right? That's about a what, 1,000-point drop. So a lot of things that I need to see and measure throughout the week. But as of right now, right, just showing you guys my cards, what it is that I'm looking for. I'm looking for continued expansion here to the downside. Of course, I'll have to measure how weak the market is day in and day out as we get new information, new candles. And then from there, I'll pivot and adjust. And I'll do my best to update you guys and let you guys know throughout the week. Working down into the hourly chart. Market traded higher, took out the previous day's high here. You'll see SMES failed to do that, creating a lower time frame divergence, and then aggressively selling off. You may be asking, why'd you trade S&P on Friday? I traded S&P on Friday because the S&P was much weaker. If you're not in the free Discord, I've already taught several times how I use relative strength analysis to decide which asset I'm going to short. Whoops, what's going on? So I already touched on there how I use relative strength analysis to know which one to short. S&P is one of them. So the fact that S&P did not take out this high and the NASDAQ did, they both dropped, right? So if you would have went short, right, when I went short S&P, a lot of people use that to go short NASDAQ. Everyone was banking. So it's not a matter of one is right or wrong. It's just a matter of which one is better. And if my analysis concepts tell me which asset is going to be the better short, then of course I'm going to go into the asset that I think is going to fall a lot easier. So going back to the hourly chart here again, S&P at the highs aggressively breaking down. Because we had a large range day on Friday, I do not have a lot of expectations for Monday's trading. It'll likely just be a day where it returns to fair value, which is your regular trading hours gap and new week opening gap, simply because of the large range day we have on Friday. If the market does have open ranges, deliver a lot, then I'll probably not participate in that because of how big of a range we saw on Friday. So on the hourly chart, looking for this low here. So now what I want to go into is how initially I was bullish going into this day. So I want to turn this fair value gap a different color because I had it blue. When it's bullish, I usually use it as blue. That's what works for me. And then this is what I was looking at here going into, whoops. And this is what I was looking at here going into the 9:30 open. So this is one of the only times you're ever going to see me using the market replay. So this is the data I had going into 9:30, right? Market dropped down into the daily fair value gap, cleared out sell side here, here, and here, right? If we're bullish, we want to see that. And then I like how we overtook this fair value gap here. So the market started trading through that. So when I got into the session at 9:30, I'm looking for buy side here and buy side here for continuation. Really liked how we dropped down to the daily fair value gap, quickly snapped higher. Low here taken out. That makes this one intermediate term low. And then I was looking for continued upside. Now let me go into what allowed me to be flexible and not get my ass handed to me on Friday. Let's play this forward a little bit. Oh shit. As you can see, I'm not that good with the market replay. What the fuck? All right, there we go. All right, 15-minute chart, still with the market replay. Let's see if I can get this right this time. So going into the session here, as I was saying, bullish order flow, right? Market dropped down to that daily gap, nice displacement outside of that. And then I was looking at this daily candle here. I was initially looking for a classic buy day, meaning London prices in the low. And then we see a New York continuation. But I want to take your attention to two very specific levels here. This one here. And let me make that thick so that stands out. And then this low here. Now, before I answer, what do you guys think is significant about this low here and this low as it relates to market structure and order flow? What do you guys think? Those of you guys in the mentorship, don't answer. I know you guys already know. Let's give everyone else a chance. What do you guys think is important about this low here and this low here in our analysis if we're bullish? Usually there's a little delay on YouTube, so I have to wait a second. All right, Jason, that's a good answer. Yes, sir. Taking liquidity. They're both intermediate term lows. Good answer, good answer. Intermediate term low. All right, love it. Take sell-side liquidity. Awesome. Yes, sir. All right, Julia, my man. All right, you guys know it already. Absolutely. So these lows here, many different ways to look at it, right? It took sell-side. It took an intermediate, or it's an intermediate term low, or it's a protected low. Guess what? All those three things mean the same exact thing. This low here took out these stops here. This low here took out these stops here. So now these lows in our analysis become significant because they're now intermediate term lows. So if I'm bullish and I want to trade a long setup, I want institutional order flow and market structure to be bullish. So what would that mean? We would have to stay above these lows. So let me play it forward. Let me see if I can not have this whole thing just print the whole day. Fuck. Sorry guys, still getting used to this market replay stuff. Perfect. So as soon as I get to 9:30 here, absolutely. Really good answers, guys. So as soon as I get to 9:30 here, let me label that 9:30. I'm watching, right? Generally in the first few minutes of 9:30, I just want to get a feel for what they want to do with it. So 9:30, I'm watching here. So I'm saying, okay, we're retracing down into this fair value gap going into 9:30. That's great. So I want to see, does the market show support? Does it displace higher and give a bullish buy setup, right? Run on stops, displacement, shift in market structure, the whole 9 yards. But instead, the market gave me new information. It cratered through these fair value gaps and this low here and this low here. So if you know how to read a price chart, there's nothing bullish in here, right? There's nothing for me to go long on. Order flow is bearish because this fair value gap here and here, we completely ripped down through it. These lows here and here are key intermediate term lows. If I'm bullish, I don't want to see that violated. And if I do see it violated, that either makes me bearish or it makes me neutral. So seeing these intermediate term lows violated to the downside prevented me from forcing my bias, forcing my will. And the reason why I took the time to share this with you guys and not just do a market review for the mentorship community is because you guys are getting my bias here ahead of the week, right? Ahead of the week, sharing with you guys what I'm looking for, my targets. But I don't want you guys to be stuck inside that. I want you guys to learn how to actually read a price chart. Read what the market is telling you. Don't just say, oh, Dylan said the bias is bullish, I have to go in here and buy the market. Because if you start seeing things like this, then either step to the sidelines or go short with what the market's telling you. So you see how the 15-minute chart communicated the market's bearish. And that's a huge step forward for a lot of you guys because most of you guys, when you're trading, you're literally looking at the charts like this. You're seeing no information being zoomed into a 1-minute chart like this. You're completely missing the plot. You're not seeing market structure. You're not reading order flow. And you're just looking for patterns. You're looking for gaps. You're looking for swing highs, swing lows with no context. So this is why when I'm trading and when I'm live trading, I'm always looking at the 15, the 5, and the 1 minute. Of course, on all my other monitors, I'm also looking at the daily and the hourly. So I'm looking at all those time frames and cycling through that information throughout the day. But at the minimum, you want to be looking at 15, the 5, and the 1 minute because it's going to give you this important information that you're not seeing if you're just zoomed into a 1-minute chart like this because you're missing the entire plot. So going back up to the 15-minute chart here, and then you guys can see the day ended up being really bearish, but you want to study what made the day bearish. Well, we broke down through intermediate term lows, and then what's this here? And then what's this here? Breakaway gap, right? An imbalance at the beginning of the price run that was not able to get filled, which is confirming two things, right? One, that market structure is bearish with the intermediate term lows being broken, but two, not that it's just bearish, but it's extremely heavy because these fair value gaps, the market couldn't even trade up into it. This wick here, this candle open, traded higher, couldn't even get to the midpoint of the wick. Same thing here, this candle opens, trades higher, can't get to the midpoint of the wick. So by understanding market structure, by understanding institutional order flow, you're able to see this market is extremely bearish. So that's how I was able to go from bullish bias going into 9:30 to then looking for lower prices because of the signatures the market was giving. Not just, oh, the market dropped a lot, so I'm just going to chase it short. No, the market's communicating it's bearish. And then going over to S&P, then I'll review the actual trade I took. You'll see ES did not take out these highs here. So we had an SMT divergence, and then at the same time, we have the same thing in ES, right? That's why you guys asked me, okay, take a look at S&P. What's the same thing as NASDAQ, right? So what do we have here? Intermediate term low. Here, intermediate term low. We just completely knifed down through it. So is that telling me to go long? The market structure is not supportive of long setup. So either I have to do it, go short or get out of the way. I elected to go short because I could see the obvious sell side liquidity pool here. And if you've worked with my material for any length of time, even the free stuff on YouTube, you guys know the money for me is in 15-minute highs and 15-minute lows. It really is that simple, guys. So if the market's communicating it's bearish, where's it going to go? Sell side liquidity or sell stops below the market or inefficiencies below the market. So if the market's communicating it's bearish here, Well, it's not a mystery as to where it's going to go. It's going to reprice into that previous day's low. Let me go ahead and label that real quick. Left, bold, 18. Right, so we have the previous day's low here. Right, so this is what you want your back testing logs, your every day when you're reviewing and back testing the day. And when I say back testing, that usually causes a lot of confusion because I know a lot of you guys think back testing is going back 6 months on some random 1 minute candle on Euro USD and looking for your pattern. I personally don't think that's all that effective. My version of back testing, or how I view back testing as the most effective way, and credits to good old ICT here, every single day is a new back testing opportunity to review the daily candle, the hourly, the 15, the 5, and the 1 minute. And the reason that's going to be such a more productive use of your time than going back 8 months on some random 1 minute candlesticks is here you have a feel for the economic calendar, day of week, what's the higher time frame market structure, what's the sentiment, what were you looking for in that day, and every day you have a new back testing opportunity. And it's those that do that in our program that are able to get results extremely quick, because it's not that complicated to read a price chart. Once you know what you're looking for, it really is the same shit every single day. So I'm saying that to say, well, how do you train yourself to get bored by it? To see the same things day in and day out? Well, you have to train yourself to see it, right? And this is one of the exercises that I do. I still do. And I recommend to all those I'm coaching and working with that if you really want to take this serious, if you want to just move over the hurdle of being someone that just has it as a casual hobby, or maybe you're just gambling and you really want to take this serious, this is the work you have to do. So I know a lot of you guys have been reaching out, asking about mentorship, how to get in. If you're not willing to do this day to day, then I'm not going to be able to get you those quick results like I'm able to get from my clients. So if you guys want to take this serious, I recommend you guys do this every single day. Review the charts, look at it top down, note your observations. And over time, what's going to happen as a derivative is you're going to get really good at reading price charts. And then what do you think happens once you get good at reading price charts? Well, you're not going to be going long in this, right? And as a derivative, you're going to see a lot more setups. You're going to see a lot more trades, a lot more opportunities, and then eventually, not right away, is going to turn into a lot of money making for you. But if you're just trying to rush to the money making and you have no idea how to read a chart, well, then it's going to be really difficult for you. So hopefully, whoever's here listening to that, you're going to be able to use this insight to make this process easier for you, right? There's nothing that's harder for me to hear than those that are working towards being a consistently profitable trader and takes them 5, 8, 10 years to get there. It doesn't need to be like that. You can get there in 6 to 12 months if you're doing the right things. So looking at the 15-minute chart here, we have the previous day's low here, right? Because it's Thursday's low on Friday's trading. So once I saw the order flow was bearish, well, it's really easy for me to identify where we're going to draw to, right? And then here we have the previous day's low. So then when I go into the 1 minute chart, now that I see market structure is bearish, order flow is bearish, but the market already dropped a lot. So how do I make sure I'm getting in at a premium without chasing the market? Well, if I'm bearish, before the significant price run to the downside will occur, we're going to see a run on stops. What do you see up here? High, taken, big price run. Swing high here, taken, big price run. Swing high, taken, big price run. So you see how the 1 minute chart, it's really easy to read when you know the 5 and the 15-minute chart and what it's likely to do. So if I'm bearish, I'm not just going to chase it all the way down here. I need to see something set up. And sometimes I will miss a move, right? I show real trading. I trade live every day because I like to show what real trading looks like. Sometimes I miss the move. Sometimes it runs without me and I can't get positioned, or it trades into the fair value gap too quick and it just explodes away, right? That's the reality of trading. But so that you can trade in a systematic way with the real process, that's what I'm doing. That's what I'm showing. So if the market's going to draw into this previous day's low here, I can't just chase a short all the way down here. I want to see the market do one of two things. Retrace back up to a fair value gap above market price, or an imbalance above market price. It doesn't have to be a fair value gap. It can be a new day, new week opening gap, any of the imbalances that we use in our analysis. I need to either see the market trade up to an imbalance or trade up above a swing high. In this case here, we have what? Swing high. Show that here. And what that's doing is that's purging buy stops before the next run lower. So we have what? The previous day's low here. They stopped it just short here and they retraced it. Retail is seeing this as what? Oh gosh, we got strong support here. Let me zoom back out, right? Because we hit it once, twice, 3 times, and then we rallied. And now look, we just hit it a 4th time. So this is one of those quadruple bottoms that we have. right? So now it's really going to be bullish from here. And you see how funny that sounds just saying it. So as they send it higher here, I'm wanting to see how we trade above the highs. As soon as we trade above this high and we create this doji, that reversal candle, I'm shorting the next candles we're trading lower. So what I'm doing is essentially a deferred turtle soup. The reason it's not actual turtle soup is because I'm not shorting above the high, but I'm using this insight to short in close proximity to that high. Because what's this now in my analysis? An intermediate term high. Why is that? Because this high took out buy stops when we're bearish. So if we're going short, we want to short where? Near intermediate term highs. So by shorting in close proximity to this high here on this candle, I'm shorting by the intermediate term high before the next significant price run. Because before a significant price run, you're going to get a run on stops. And that's how I was able to use that insight to not only be flexible in my bullish bias, but then also be able to frame a setup, take it down, and do it all live. Hope the review was insightful, guys. That's all I have for what I'm looking at here today. I looked at dollar bonds. Don't think I'm missing anything. Don't have planned to look at any other markets. The only thing I'm focused on is what I shared with you guys here this week. So any questions for me before I close out, guys? Jason, it goes fast because you're in 10x the speed. I believe that's down here. Let me see. So if I put it on, oh, okay. Oh, so it goes slower based off the speed you're doing. Gotcha. Gotcha. Hey, appreciate that, Jason. As you guys can see, market replay is not something I'm used to using very often. Dylan, if you want to advance one candle at a time, you have to hit the button next to the play button. Oh, that's good to know too. Let me see. Ah, okay. So you can get one candle at a time. Oh, good deal. Good deal. Appreciate you guys. Thank you very much. Look, you guys here tuning into my live stream, and I'm learning from you guys. Appreciate it. Thank you. Health Freak. Hello, hello. Slim, we had a close under the 4-hour BTC at 10 a.m. We use that as inverse. I saw it after it happened, but is that something you would use as an entry or confluence for an entry? Absolutely, absolutely. So personally, I maybe wasn't looking at that time frame, or I was looking at a different inefficiency. But the great thing is, and this is one of the things I've learned over time, because as you guys know, Dora Trading, the education side of what we do is a small component relatively to what we're doing as a company with my team of analysts, traders, and we actually have 3 now. So saying that to say, one of the things I've learned over time that's actually really interesting is that going into the session, I'll do my pre-market analysis and my team will have different levels. Still in the same range, but maybe I'm using a hourly order block and they're using a 5-minute breaker. But we're still looking at the same key levels, but we come to different conclusions of the key levels we want to use. So for example, why do I bring that up? Because, well, one, we're all profitable and we're not always looking at the same levels. So the reason I say that to say, you said you were looking at the, let me get this market replay off here. You said you were looking at this 4-hour gap here, and then you see we closed down below it. We traded up into it, used it as resistance. That's absolutely a good short, right? So just because I'm maybe not be looking at that level, it does not mean it's wrong at all. Because the market's very simple, right? If it's bearish and we close below a gap, right, and then we use it as inversion, then we can suspect it's going to be an inversion gap. So if we see this next candle open, trades up into it, and it fails to reach the midpoint, then that's telling you what? That it's really weak and we're going to see a quick price run to the downside. So you can use that insight, going over to that inversion fair value gap here. You can use that insight in several ways, right? Because once we break down through it, you see how we stay in the lower half here? That's really good. And then when we get that next displacement away, you can use that short there, short here, stop above the high, and use those higher time frame inversion gaps to read order flow, and then use them to frame a low risk, high probability entry. Absolutely. Good question, Slim. Absolutely. A good confluence to use if you already know where the market's going. But of course, the key constant that's going to be in a good entry is knowing the draw liquidity, right? So before we can have a good entry, we need to know the draw, because until we know the draw, then it's just another pattern. But if you know where the market's drawing to, order flows bearish, then absolutely money of a trade. Jason, I do this every day top down, and I want to join your mentorship. Yeah, so if you're interested in the mentorship and working with myself and my team directly, you can go into our free Discord, and then from there we announce when we open up spots. We open up about 3 a week on average. They don't stay open very long, so if you are interested, you can reach out to my team, and they can look to secure you a spot, get you locked in so that you can start getting to work towards your results right away. Lucky, how do you walk through Thursday price action after it gave a 15-minute drop? I just saw the comment was deleted as I was reading it. All right. Oh, there it is. So Thursday gave a drop like Friday, but it reversed though the rest of the day. How do you differentiate between the 2 days? Let me see. Man, question's gone again. All right, well, I don't see the question, so I'm not going to be able to answer it. Mr. Nuller, can you review gold? I'm liking bullish price action. Yeah, let's go and take a look at gold. Slim, I shorted the next 1 minute fair value gap after that. There you go. Good deal. Absolutely. Having that confirmation with the gap behind you that we couldn't even reach midpoint and we displace away, that next fair value gap will be money. All right, let's go and take a look at gold. Yeah, gold's at all-time highs. When markets are at all-time highs, it's not something you want to get in the habit of shorting. Absolutely. I'm looking for higher prices on gold. I like how we respected this down close candle. Drop that into that, respecting that. So looking for new highs on gold, and especially if we remain bearish dollar, that will allow gold to rally even easier. Crude oil, same as last week. Looking for the market to trade into this range here and then take out that. Lucky, sorry for deleting. No need to be sorry. If you still have the question, you can fire it away, and I'll help if I can. Eslam, on the daily time frame, Nasdaq, this consolidation can be considered a BPR. You think price will reach this equal lows in the high resistance liquidity run? Absolutely. So it still can trade through high resistance liquidity run price action, right? It's just, it's going to be a lot more difficult for it to do, right? So we have all this back and forth here. So it could take a long time to get to these lows because it could be a high resistance liquidity run. The great thing is the way we're able to read price charts, we're able to know if it's a high resistance or a low resistance liquidity run. What does that even mean? Well, because we're looking at the daily chart, you're going to want to look at your hourly and your 15-minute chart. Is it spending a lot of time inside of gaps? Is it giving a lot of overlapping price action, like overlapping candles? And if you see that, then you can see, yeah, it's going to be high resistance liquidity run inside this range. If you see not a lot of overlapping candles, gaps being formed, hit, quickly rejected, then you can use that insight to know we're in a low resistance liquidity run, right? So it's just all about knowing how to read the chart and just let the market tell you what it's going to do. But it very well could be. It may not be. Good thing is that we know the markets will show their hand. Adrian came in late. Happy to see you live. Glad to be here. As always, the recording will be up. Yeah, definitely is a balanced price range, yeah. Alessandro, do you have any protocol related to the change in state of delivery? So the change in state of delivery, I know it's like a big shiny object all over the place now, but it's just like a market structure shift, right? It's just a way to tell you that the market is turning. The most important aspects to know when a market is turning is, are we at a key level, and what's the higher time frame sharing, right? So let me go into the dollar example. This is one we called live. So let me go to this here. So last week I told you guys we want to see bearishness from this daily fair value gap. So looking at a change in state of delivery, it's essentially the same thing as the market structure shift, and except this one will tell you a little earlier when the price run's turning away from. But I don't want you guys to think that like the change in state of delivery is like some big secret, right? Like you still have to know that the market's going to trade into this gap, price in a high and sell off. And then once you know that, anything works. Change in state of delivery. Here now you have a breaker block. You have a market structure shift. You have an inversion fair value gap. You have order blocks. You have every entry in the world that works. So I don't want you guys to think that like the change in state of delivery is some secret that's going to, unlock the secrets of the market to you. You still have to know how to read where the market's going. Why should it go there? Then once you know that, then we look for those things, right? Then we look for the change in state of delivery or market structure shift or a fair value gap getting traded through, confirming the market's now in a sell program, right? So inversion fair value gap, change in state of deliveries, market structure shifts, none of them is a secret. It's just a matter of knowing why the market should turn here and where is it going to draw to. And then when you know that, all those details become really easy to sort out. So that's essentially the protocol and change in state of delivery. It's have to know where it's going, and then once you see that, you're able to use that as confirmation to see that the market's either shifting into a buy or a sell program. Lucky, there's your question. So Thursday did a drop on the 15-minute like Friday, but continued to reverse for the day. How do we differentiate between Friday and Thursday? Yeah, let's take a look at that. All right, 15-minute chart looking at Thursday's price action. So Thursday, yeah, I remember this day very clearly. So we sunk down into the daily fair value gap. But then what did we do here? We traded down to the daily fair value gap, and then we hit the midpoint. Market's staying in the upper half. And then we do what? We displace higher. We get a wick. How do we read wicks? Wicks are gaps. Market does what? Stays in the upper half of the gap. Displaces. Down close candle, supports price. Down close candle, supports price. Fair value gap with the down close candle, supports price. Down close candle, supports price. Everything's bullish here. Now let's look at Friday. Market decisively breaks down. We close below the midpoint, trades higher, gaps, send price lower, breakaway gap here, breakaway gap here, breakaway gap here, breakaway gap here. Market's very, very heavy. So you see the big difference in Friday and Thursday's trading. Thursday, we stayed in the upper half, couldn't get below it. And then we see bullish order flow the rest of the day. And we see the exact opposite here. Yeah, good question, Lucky. Man, pretty love you, brother. Big fan from Panjib, India. Yeah, I got quite a few Indian folks in the community. Appreciate you joining. What is that crypto you have in the watch list below ETH? Just Metis coin. It's a coin I was looking at a while back. Some of the OG days for crypto. No secret though. It's not like I'm loaded up my bags on Metis and I'm hiding it from you guys. There's nothing special going on here. I do look at it in relation to Ethereum. So if I'm like looking at Ethereum price action, I'll look at this asset as well. And just a really nice market maker sell model into these equal lows here. And then we got the same for NASDAQ here. Or NASDAQ. So much indices. Ethereum, sorry. Can I go over Bitcoin? Yeah, I'll go over Bitcoin, and that'll be the last thing here for today. There's absolutely nothing to look at Bitcoin here. Still in a consolidation. There's nothing clean about this because look at how I read price action. Market structure, order flow, drawn liquidity. What am I really able to like pull out of information here? You see what I'm saying? So it makes it really difficult for me to get a read and tell you where this market's going because it's consolidating. It's not going anywhere. So that's why, in my opinion, crypto for trading it, I think it's a pretty shitty asset to trade. I mean, if you're a scalper, you can still, find what you're looking for in this. But in my opinion, there's a lot better assets to trade for investing. Now that's, something a lot different. Because you're focused on long term, you're not even worried about a daily chart or these fluctuations. But when I see a market like this, there's nothing I can give you. Like I can't pull something out of my hat and say, hey, this is where I think we're going. There's nothing in the market structure and order flow that even gives me anything high probability to share with you, right? So I want to kind of give you the rundown because I want you to think I just don't answer your question, right? If I could, I would give you targets, but even if I called markets like this, it would look like amateur hour. It would look like complete amateur hour because just compare like this to the US dollar, right? Where there's like real inefficiencies. It's running. There's market structure I can read into. There's a clear drawn liquidity, right? It's really easy to trade and see these markets. In crypto, the reason why I don't like the crypto market is because it'll go into these really long consolidations. And everyone's getting crushed here, right? If you're position trading, if you're swing trading, you can scalp in this and still find what you're looking for because you're just looking for these short little price runs. But if you don't identify that we're in this consolidation, it's really easy to get crushed. And me seeing this price chart is something I would completely stay away from because like I said, even myself, no shame in admitting it. If I were to call this market for you guys, it would look like amateur hour. CM, what does your journaling look like? That's a good question. Let me share that with you guys here. So this is just one component of my journaling, but let me go and show this to you guys here. So this is something I share in the mentorship community, what it is I'm doing. Let me go back to the first week. So let me go all the way back up here. So I was sharing for February 14th. So this was not the previous week, but the week before that. And I want to show you guys what was not a great week for me. It's just break even, right? So not bad, not great. But I like to show this to my community and those I'm coaching because, well, one, it's a little different than the Rolls Royces and the rented Airbnbs that you're used to seeing real trading is like. But I do like to show the reality of trading. And what do I mean by the reality of trading? That sometimes not every week I'm able to bank. But what I do emphasize is look at how I close the week, break even. Because what you'll see is this week, now that allows me to be up about 4.5% on the month, which isn't anything crazy. It's really been a slow week or a slow month for me at February because it really hasn't been too easy. And a break even here. So how do I journal? How do I review my trades? So I go to TradeZella. I have my trading plan here next to me. And I'm looking at what days did I stay in my trading plan? Did I manage risk? And I'll go into those details here in a minute. But then you can see the previous week was a break even week. Again, the reason I share this is because when I was a developing trader, nobody showed me this kind of stuff. Nobody showed me what real trading looked like. It was all the bullshit I just said to you guys, right? Rented cars, broker statements, individual trades, which doesn't mean anything, right? An individual trade is not supposed to make or break you as a trader. And then it was once I started learning, seeing what real trading looked like on my end, that made it easier. So what I'm looking at when I'm journaling and reviewing, I'll get to here in a second, is these main factors here, right? I'm measuring every week. Am I being disciplined, right? Did I stay in my rules for number of trades and the setups I should be taking? Did I manage risk well? And then the last thing is making sure I'm sticking to the models I've trusted. So when I'm measuring my data, I want to make sure I'm sticking to models I've tested, I'm managing risk, and I'm staying disciplined. Because as long as I can stay disciplined, I can run up an equity curve year over year easily. So you can see a small week of break even allows me to be profitable the next week after that. And the reason why it's so important to see that is because when I was first developing, I didn't know what this looked like. So I would have a break even week and then I'm freaking out. I'm thinking I'm doing something wrong. I'm thinking Monday, shit, I need to get there. I need to over leverage my account because man, I'm not doing anything quick enough. But you know, that's how we all start, right? And then what I'm measuring this week here is, well, 1 trade a day. I took 2 trades this day. I will go up to 3 trades. As you can see, 3 trades. This day was 4 trades. If I recall correctly, if I take a break-even trade, I don't count that as like a trade. So I'm willing to take a 4th if one of them is break-even. So I think that's why I went to 4 trades here. But what I'm measuring is, do I stay in my allotted number of trades? Am I managing risk? And am I staying within my model? And then what you'll see is I'm not everyday trading, right? I'm just looking to trade the best, the cleanest days that are giving me what I'm looking for. And this is in no means me trying to flex a percentage, right? Show you guys big money. If I wanted to show you guys big money, I would load up all my accounts on a TradeZella, show you big numbers, but that's not going to do anything for me. And it's not going to do anything for you guys either. So what I do share is this is the account I trade live every week with the mentorship community so they can see what real trading actually looks like, right? What it looks like to be profitable, what it looks like to handle a losing day, right? Because those are things, like I said, I never had access to. No one ever showed me that. So as a result, my trading suffered because I would take a loss and start freaking out, thinking I'm doing something wrong. Or I would try to then turn this Friday into like a big green week, right? And then what would happen? I'd go into the weekend even more red, and then I wouldn't be able to be profitable at the end of the month, right? So when I'm journaling, these are the things I'm looking at. I take about 30, 45 minutes to do this every Saturday. And then I'm evaluating, again, did I stay in my trading plan? Did all the trades I take, even the losers, would I take them again, right? Because if I would take the losing trades again, then that means it's what? It's a good losing trade, right? And that's what you want to start measuring. And that's what's going to actually start driving results for your guys and your trading. Great question. Wanted to share that with you guys. So I'm glad I was able to get that in for you guys. Can you talk about measuring gaps? I've talked about them in the past. I can show you guys an example here from, let's look at, this is a trade I took. I used a measuring gap to take this trade for S&P. So let me go ahead and share this with you guys here. So previous day's low here was the draw. And again, the same thing as all these other tools, right? The draw is going to be the number one thing for measuring these things. All right, so if the price run is starting here, at the beginning of the price run here, and here I want to see a breakaway gap because that tells me that's beginning a really nice price leg that I want to trade. And then what I'll look for at 50% of the price leg is a gap, but not just any gap. I want to see a gap that turns into a breakaway gap. Why? Because if they leave this gap open here at 50% of the anticipated price leg, which is previous day's low, I already covered that in great detail. I want to see a gap at 50% left open. Because what that tells me is we're going to duplicate this range from this low to this high, and we're going to see another range of equal magnitude to the downside. So that's an example of a measuring gap and why I was looking for these lows here. And then the fact that that gap was left open, run on stops, easy price run down into the lows. Great question. All right, so I covered what my journaling looked like, talked about measuring gaps, talked about how I flipped my bias on Friday. This is turning into a masterclass here. But really good questions, guys. Appreciate your questions here. Jason, are there no trades based off? Are there no trade days based off the economic calendar or just personal? Sometimes it's both. Sometimes I'm just not able to be in my charts. Sometimes the economic calendar is not giving me anything I want to work with, and I don't take a trade. Or sometimes the economic calendar is good, but I miss a trade, or the fair value gap happens too quick and it doesn't let me get into it, right? All real things that happen to a real human being, right? So that's usually what happens those days, or my personal schedule just doesn't allow me to be in front of the charts on those days. But keep in mind, guys, like I said, that's one of my accounts. I'm trading like 4 or 5 different accounts, so I have a lot going on with my trading. So those other days where maybe I didn't trade this account, maybe I was focusing on one of my other accounts those days. So it's hard to say. Eric, if your setup happens a few minutes before 9:30, is it okay? Yeah, I mean, if the model forms before 9:30, if I do take a trade before 9:30, generally I'll just reduce my risk a little bit. But yeah, there's nothing wrong with trading pre 9:30. If you know what you're looking for. Joe, did you have a question, my man? I don't see it anymore. All right, thanks, Dylan. Enjoy the rest of your day. Will do, Joe. Alrighty, guys, that's all I have here for today. Hope this one was insightful. If it was, do give the stream a like on your way out. That helps us out greatly. With that, guys, I will see you guys next Sunday. I know I've been saying this for a while, but I will do my best to get on live with you guys, even if it's just for a tape reading session on YouTube. But like I said, I've got my focus with those I'm working with right now, and they've completely got my attention because becoming a trader or a profitable trader isn't easy. Coaching others to become a profitable trader also requires a lot of hard work. So that's where my focus is at, guys. Appreciate you guys joining us here today, but I will do my best to hang out with you guys over a AM or maybe even a PM session, live stream, maybe some tape reading, or maybe I'll take some trades if I see what I like, but we'll have to see and play it by ear. So with that, guys, have a great rest of your day. Take care. Have a safe weekend. I'll see you guys on the next one. Take care, everyone.